Hi everyone, Maria Tyler here. In this short video today, I'm going to take you through step 4 of your assignment for our unit. Okay, so just some tips before we start. You need to make sure that you're reading the information carefully. It contains an example in the assignment itself, and there's also an associated Excel file example as well. Now we'll go through that example in the video soon, but the key concepts that we are really asking you to show by completing step 4 is that you understand what a chart of accounts is, that's the underlying key concept, that you're able to record or classify transactions into the chart of accounts that you create, and again I'll show you how to do that in the example soon, that you can prepare a financial statement, mainly the income statement, but some students do, once they get on a roll, like to see if they can create a balance sheet, their own balance sheet as well, and that's fine, based on the transactions. And then we ask you to interpret your financial statement or statements if you do a balance sheet as well. And you also need to understand cash versus accrual accounting. Now we predominantly show you how to account on a cash basis in the example. You can choose to do on an accrual basis if you like, and we certainly ask you to think about these concepts and explain about cash versus accrual key concepts in the written component to step 4. So it's not just a practical component, there is also a written component. So with that, let's skip to the assignment. So it's worth 5 marks and it basically involves you practicing the recording process. So this activity aims to consolidate your understanding of the concepts that we've been studying over the last few weeks by considering your own personal finances, and what better way to do that than something really personal, and producing a basic set of financial statements for yourself by using your bank or loan account and credit or debit card account transactions. Now, before you start getting worried about everybody spying into your personal information, we have made a provision that you don't actually have to use your personal information. You can actually change it, so we'll look at that in the next paragraph. This exercise demonstrates the cash basis of double entry bookkeeping, but we certainly ask you to consider and be able to explain, for example, and provide examples of accrual transactions which you might come across when you're exporting these personal transactions or creating fictitious ones. So, first of all, you need to obtain all of the bank statements for each of your personal accounts, savings, check, loan, credit and debit cards, for the same period. This is very important, okay? It has to be for the same period. Remember, that's actually one of our underlying assumptions and required assumptions for being able to prepare reports on a timely basis over a certain period. So they need to be for the same period. And I've said choose a reasonable period in which the volume of transactions will not overwhelm you. So for example, it might be for a period of 1 month. Now, if you have you do lots and lots of transactions, you might find that you only have to do it for a week. You might have too many in a month. Or if you find that you're not really doing many transactions at all, you might do it for 2 or 3 months or 6 months. So the period is up to you. We're not dictating how long to do it for. We're letting you make that judgment. We want you to make the call based on the volume of transactions that you do in a certain time period. Okay. Some students also really like this exercise because it helps them, it's given them a structure which they can start to think about accounting for their own money. And I mean, if you can't account for your own money, how are we supposed to expect you to account for other people's money, right? So the idea is that you're being, I guess, introduced to the bookkeeping process based on your own personal transactions. Now, this is very important. You do not need to include all of your transactions. You only need to include those you are happy to include in your assignment. Remember, your assignment will be peer reviewed and will also be read by your markers. And you also put it on your blogs. So if you don't want any of your transactions or your personal transactions to appear, that's fine, change them. You can use fictitious or partly fictitious transactions if you would prefer. Most students don't mind. They feel like they don't care that they have their information out there. Some students will export their information and then change all the figures. Some students will export the information, change the dates, figures and names. It's totally up to you. You can purely make up every single transaction. So you don't need to do your own personal accounts if you don't want to. Excuse that.
Fire testing will commence shortly. Please disregard alerts and evacuation signs. Thank you.
There's a fire drill happening. But anyway, so we just got to ignore the background noise. Okay, so you don't need to include all of your transactions if you don't want to, like I said. But if you're happy to, that's also fine as well. We don't care about your transactions. What we are looking at, what we mark for, is your demonstration of your understanding of this bookkeeping process. Okay, so that's what we care for. So if you want to make up transactions, that's great. Make them up. Okay, so I've clarified that. That's one of the biggest issues students always have. Oh, I don't want to give my personal info. You don't have to. We're asking you to use your personal info as a basis, and most students find that they actually like it because this gives them experience in one form of keeping track of their money, and actually it provides them with some good insights into how they're actually spending their money. But you don't have to use your personal. You can make them up, you can change the figures, you can change the names, you can change the dates, whatever. The idea is that you're using transactions and these provide you with a basis to start with. Okay, so choose a period in which the volume won't overwhelm you. Okay, now in the example that I'm going to show you, we basically use a month. And you can see that there's at least 10 transactions. And I would say if you use less than 10, you're probably not going to be able to demonstrate a good chart of accounts, as well as a good range to put into your chart of accounts. So I would definitely say I would choose a period which has a slightly more than 10 transactions, but not too many, maybe not more than 20. And you'll see that. Now, your chart of accounts, that's a key concept. You need to understand what a chart of accounts is. Remember, it's every account that your business uses to classify its transactions, okay? And a lot of the time, your transactions will determine what your chart of accounts is, and that's certainly what I do in the example. That means that every business will have a different set of chart of accounts, okay? Because every business operates differently. So similar industries may have similar chart of accounts. They may call the same account a different name, but it still represents the same expense. For example, fuel expense might be called fuel expense in one firm. Another firm might split that fuel expense into the types of fuel. They might have unleaded versus diesel. So how detailed you want your chart of accounts to be, or how general, is again up to you. And it's usually based on your transactions and the level of detail that the users of your reports actually want. So these are the key concepts that we really want you to think about as you're completing this assignment. So you need to decide, you need to create your own chart of accounts, and there's a link here that Martin has put in to a YouTube video to again explain another view of what a chart of accounts is, okay? So a chart of accounts is a list of the ledger accounts that you are using, and usually there are associated numbering or some sort of alphanumeric system for these chart of accounts. So for example, in electronic systems such as MYOB, you'll find that there is a numbering system for each class. So we look at assets, liabilities, equity, revenues and expenses, and so assets will be all asset accounts will be 1- something. All liability accounts will be 2- something, equity accounts will be 3- something, revenue accounts will be 4- something, cost of sales accounts or trading accounts in MYOB start with 5- something, and then all other expenses are 6- something. So that's their numeric way of classifying their chart of accounts. And again, businesses have leeway to tailor the numbers. But what we want you to do is go through each of your statements, so your bank statements, your credit card statements, whatever, line by line, every single transaction you've spent or that money has come in, and classify each transaction, okay? So in this way, you actually create your own chart of accounts. So for example, this is the example we're going to go through. Let's assume that this was your bank statement for the month of January, okay, for the first 3 columns. Now, you might go through and classify each transaction as follows in the 4th column. So this literally is based on one of my ex-clients and old clients, general day-to-day bank accounts that I was working with a number of years ago. And so I've changed amounts and names slightly, but they've allowed me to use this as a basis, as an example. So I literally have exported this directly from their bank online statement, or they export it and send it to me. So this will come directly from your personal bank accounts, debit card accounts, loan accounts, whatever. And if you would like to then just change the numbers and the names to make it non-personal or fictitious, that's great. You don't have to, you can just use them again as is. So just assume that these were all the transactions that occurred for 1 month. So we're just going to be doing it on a month-by-month basis, because that gives us a good amount of transactions, not too many, but a nice enough so that we have a small solid chart of accounts to demonstrate our understanding. So we literally just want you to go through line by line and have a look at what they are. So on the 1st of January, there was an amount coming into the bank account, and it had a transaction detail saying interest. So obviously that was interest income on their bank account. So I would then say, right, that's my first item of revenue. So I'm starting to classify these transactions. So I'm just going to, for the sake of ease or simplicity, I'm going to start with revenues all starting with 1. 1 dash something is going to be all of my revenues. Then all my expenses are going to be 2 dash something. Then all of my assets are going to be 3 dash something, all of my liabilities are going to be 4 dash something, and all of my equity is going to be 5 dash something. So that's what I'm going to establish, and that's what I would write about in my Word document. That's how I'm going to create my chart of accounts. And then every item of revenue then I'll just start with 1-1, 1-2, 1-3, 1-4, and so forth. You don't have to follow that system. You can create your own. You can say, I'm going to use an alphanumeric system, so all of my revenue is going to start with A, and then a number. And then all of my expenses are going to start with B, and then a number. It's up to you, as long as it is a thoughtful system, and one that can be referenced easily. So you can look at something and go say, well, that's an expense. It starts with 2 dash, and all my expenses start with 2 dash something. So I'm literally just going to call it 1-1 interest income. It's going to be my first item in my chart of accounts as income. So let's go to the next transaction. On the 3rd of January, there was an amount going out of $120.10, payment to GMHBA. Who knows what that is? So I asked the clients, and they said that's for our private health insurance. I said, okay, no worries. So I know it's an expense, it's going out, and it's the first one I've come across so far in their chart of accounts. So I'm just going to call it 2-1. So all my expenses are going to start with 2 dash something, and it's just the first one I've come across. So 2-1, and I'm going to call it private health insurance expense. Okay, next transaction on the 3rd of January. It's also an amount going out, it's in brackets. So $17.73. Payment to insurance line. So I know it's obviously going to be some type of insurance. Don't know what type of insurance it is. So again, asked the clients, and they said it's income protection insurance for the hubby. I said, all right, cool. So it's an expense. It's going out. So it's going to start with 2 dash something. And it's the second expense I've come across so far in their transactions. So it's going to be 2-2, and I'm going to call it income protection insurance expense. So you just have to call it exactly what the item is. So again, on the 3rd of January, so another expense going out of the bank account for $32, and it tells me it's a direct debit to Virgin Mobile. So I asked the clients, they said, yes, that's for the wife's mobile phone. I said, all right, no worries. It's my 3rd expense I've come across, so 2-3, and I'm going to call it telephone expense mobile. And I said to the clients, do they want a separate mobile phone account for the husband versus the wife, or were they happy just to have them all into the one account? And they said, just put it all into the one account. We don't care. We just want to know how much our mobile phone expenses are in total. We don't care whether it's separated for hubby or wife. So I said, great. I'm just going to call it telephone expense mobile. I'm not going to make it a sub account. So I'll put it, if they wanted a separate account for the hubby and separate one for the wife, I'll just go 2-3-1 telephone expense mobile hubby, 2-3-2 telephone expense mobile wife. And that's how I would make my chart of accounts more detailed. In this case, they didn't want that. They just wanted it all lumped into one. So I just simply said 2-3 It's the third expense I've come across so far in their transactions. So 2-3, telephone expense mobile. Okay, 4th of January, there's an amount coming in, $981.50. Deposit from XYZ Pay. So it sounds to me like that's somebody's salary or wages. So ask the client, they said, yes, that's the hubby's wages. So that's cool. Do you want a separate account to show hubby's income from wife's income? They said, no, we don't care again. Everything goes in joint. So we're just going to put in, as you can see, this is one bank account. So everything goes in this one bank account anyway. So they just wanted one item. So it's income. So it has to start with a 1 in the chart of accounts I've created. And it's the second income that I've come across. So I'm going to call it 1-2. And I'm literally just going to call the account income, salary and wages. If they wanted a separate one for the hubby and a separate one for the wife, this would have been 1-2-1, income, salary and wages, hubby. And then eventually when I get to the wife's, I would call it 1-2-2, income, salary and expenses, wife. Okay. Next transaction on the 5th, there's an amount going out and it says internet banking, bill pay, TMR, reg renew. I'm like, I don't know what that is. So I asked the clients, they said, oh, that was for the registration for hubby's vehicle. So I said, all right, it's an expense going out. Now we'll come back to this expense because this is one of our cash versus accrual transactions. Remember, we're just doing it on a cash basis at the moment. So it's an expense going out. It's going out of, it's outflow, cash outflow from the bank account. So it's an expense outflow on a cash basis. It's the 4th expense I've come across so far in their transactions. Expenses in my chart of accounts start with a 2. So I call it 2-4 and I'm going to put vehicle expense registration. So the wife doesn't have a car, so there's no need to even ask if they want to split it up. They only have the one vehicle, so it just goes to that one expense. On the 11th of January, there was another amount coming in, and it was that same deposit from XYZ company. So I know already, I've already come across one of these back on the 4th, and I knew it was the hubby's salary and wages. So I simply classify it to that same account. It's important that you don't create another account, otherwise you miss the point. You haven't shown that you've understood the point of a chart of accounts. The point of a chart of accounts is to group all like or similar transactions into one. Okay, so this is a similar transaction to this. It's the same transaction exactly, just on a different date. It's the same salary and wages for the hubby. So show that you understand it goes to the same chart of accounts that you've already created. Okay, if you create a new one, we'll mark you down because it's not showing that you understand. You're not consolidating like accounts, like transactions. And this is something that actually happens a lot in the real world. The number of accounts and audits I've done for small clubs and associations that have multiple expense accounts for the same expense drives me mad, drives most accountants mad. If there is a similar transaction, don't create another chart of account. Find a chart of account that it already belongs to and group it in that chart of account, okay? A chart of accounts is only as effective as how you use it. So show us that you understand that you are grouping this similar transaction with one you've already come across. So put it to that same chart of account. Okay, another transaction on the 16th. It's an amount going out. Actually, there's two amounts on the 16th. I can see this here. And it looks like they're going to the same. This looks a bit funny. It looks like accidentally there's a double transaction. So ask the client. The client said, no, it's not an accident. They actually have two separate accounts with the same amount going out on the same day every month because they individually, hubby and wife, sponsor a Chinese orphan, essentially. So they told me a bit about this organisation. Actually, it's a really good organisation. It's called the Chinese Orphans Assistance Team. And basically, it was started by a lady from Gympie in Queensland. And she went over for a visit to China and found there was a need for looking after orphans over there. Long story because of policies over there and that. So she started up an orphanage over there in Jiaozhou. And yeah, and so she needs funds, and so they contribute to the upkeep of basically employing IVs to care for these little Chinese orphans. So anyway, if you want to check it out, it's all online. COAT, I think it is, COAT.com.au. No, maybe not .com. Anyway, if you Google Chinese Orphans Assistance Team, I'm pretty sure it'll come up. So, long story short, they explained the hubby does 100 a month and the wife does 100 a month. So that's cool. I said, right, that's donations. They do actually, it's tax deductible as well. So I'm like, right, I'm just going to call them, it's an expense, it's an outgoing, and I'm going to call it donations or gifts. So it's still the same thing, even though one's from the hubby and one's from the wife. Again, they don't want it separated. They just put it to the same account. So I'm just going to put it to, it's the 5th expense I've come across. All my expenses in my chart of accounts start with 2. So 2-5, expense, donations and gifts, and both of them go to that because it's the same thing. Even though they're from, one's from the hubby and one's from the wife, one's going out in the hubby's name and one's going out in the wife's name and the receipts come back in separate names, it's still the same expense. We're grouping like transactions in our chart of accounts. Okay, on the 17th of January, there was an amount coming in, but this one came from a different company, so we'll just call it ABC. And they said, now that's the wife's wages. So again, they don't want it grouped to different. They wanted it all combined into that one chart of account. So I'm not creating a new chart of account. I've already got one up here. I've already created it here. I'm going to put it straight to that, lump it in there with the hubbies. And again, on the 18th, the hubby gets paid, so it also goes to that same income account. Don't create a new one. Don't double do, repeat the wheel. Okay, on the 18th again, there's an amount going out, $500 neat, and it says internet banking, bill pay, Visa card. So I assume that's paying one of their credit cards. So I asked them again, they said yes. I said, do you actually have the Visa card statement that you paid so they can actually see what this payment went towards? And they did. So they showed me the Visa card payment. So if I wanted to be exact, I could actually split that $500 up according to the Visa card, some of the Visa card transactions. Now obviously that amount didn't cover all of the Visa card. They still had an amount left over, but I could have classified the first $500 worth of transactions on that Visa account into my chart of accounts as well. When I looked through the transactions in that Visa account though, they really were for things like fuel for the car, shopping at like Woolies, things like that. So it really, to me, instead of going through individually classifying every transaction, I went, well, every transaction is pretty much general living expenses. So I just created one account code and called it 2-6 general living expenses. So it was my 6th expense that I came across. Now, if there had been separate amounts, like if there had been a vehicle registration paid in there as well, then I could have separated this $500 into more than one chart of account. And also, if the clients had wanted to separate those general living expenses into, for example, food versus fuel, I could have created sub-accounts for this $500 as well. So for example, I could have had 2-6-1, general living expenses food, 2-6-2, general living expenses fuel, and so forth. So depending on the level of detail you want is the level of detail in your chart of accounts. Now students have actually done this. They've actually, when they've made a payment to their chart of account, to their credit cards, they've actually gone in and split up whatever the payment amount is. And some students are so detailed, a lot of it they find is for takeout food. Students love takeaway food. So, and some students wanted to know the amount they were actually spending on different takeaway food places. So they had like their own chart of account for food. So let's just call it 2-6 to keep going for my example. So they had an account called 2-6 food, but then they split that up into 2-6-1 food McDonald's, 2-6-2 food Subway, 2-6-2 food Pizza Hut. So they actually had separate takeaways, and one of their insights was always, oh, I can't believe how much I'm spending on takeaway. So again, how detailed you want to make your chart of accounts is up to you. Okay, that's how you demonstrate your understanding. In this case, client just wants to know what's the general cost of their living. So I'm lumping it all together. It also makes my example nice and easy for you. All right, next transaction, 23rd of January, an outgoing $35 to direct debit Virgin. They said, okay, that's for hubby's mobile. Now, they didn't want the mobile phone to split. They wanted it all lumped together, remember? So no need to create a new chart of account. I've already done one up here. Use that same one, 2-3, telephone expense mobile. On the 25th, we've got another pay for the hubby, so don't create a new account, put it to that same one. By now, by the time you get through near the end of your transaction list, you shouldn't be creating new accounts. You probably find that you've got a few repeated ones. You might find a new one near the end. That's fine, keep classifying them, but you'll probably find, as we've already seen in these last 4 transactions, there's no new accounts. We're simply using ones we've already created. And then on the 27th, there's 2 amounts going out of the bank account. One's for another credit card they have, and the other one's for another credit card that they have. Okay, so again, I asked them for the credit card statements. They showed me those credit card statements. These 2 actually paid them off in full. This one didn't. This one was just an amount contributing towards that particular card. But these 2 actually paid those 2 credit cards off in full. So when I actually went through to see what sort of transactions these amounts comprised of, it was the same thing. It was like shopping, you know, if hubby had done a trip for work, there was a few, you know, roadside swipes of his card. So it was basically for general living expenses. So I said, right, there's no need for me to classify every single transaction. I'm just going to classify the whole payment because all of those transactions really are the same thing, and they would be going to this same account anyway, even if I was to do individual line by line. So I'm going to group them all to that general living expenses account. Now again, if you were using sub-accounts, you could break this payment into a number of different accounts in your chart of accounts. Okay, so that's an example of the way that you can do that, all right? So please use Excel to do this task. If you have online banking, you can do the above very simply by choosing a date range and then simply exporting this to a comma-separated file, so CSV file, which can be opened in Microsoft Excel. And then, so that'll give you at least the first 3 columns, and then you can classify your chart of accounts in the next column, okay? Please note you need to use Excel for this step. This will allow you to complete the next step, which is creating your financial statement, where we actually get you to link cells and use some simple formulas in Excel, okay? Now, when you've classified your transactions and then created your chart of accounts, I want you to write out your chart of accounts for me. So right here, this is not complete. This is classifying your transactions, but now I would like to see your chart of accounts written in nice, neat detail. So I'm just going to show the underlying Excel file associated with this. So this was the raw data that the client sent to me. Now I'm just going to start and say, call it my chart of accounts and start classifying. So remember the first one I called it 1-1 interest income, the next one, you know, I went through how I classify, so 2-1 private health insurance and so forth. So I'll go through and I'll just copy those in there. So this is how I've already gone through with you and classified them. Now I'm going to create my chart of accounts. I want to show my marker what my chart of accounts is, and I can explain it to them in my Word document as well. So the first, I'm going to show them that all of my revenue accounts are going to start with 1-something. That's what revenue is. Then I have the first revenue account I've created is interest income. The next one I've created is income, salaries and wages. Okay, that's all the income expenses, all the income accounts I had. So my next category in my chart of accounts starts with 2-something, and they represent my expense accounts. So where's my first expense account? Private health insurance. So my first expense account is 2-1 private health insurance expense. My next one is 2-2 income protection insurance expense. My next one is telephone expense mobile, then vehicle expense registration, then expense donations and gifts, and then general living expenses, food and fuel. Okay, and that's all the expenses I had in my example. Now, I haven't classified any assets yet, but if I did have any, they would start with 3-something. Okay, and my first one I would have would be 3-1 cash at bank. That's what I would put there. Now, some students in here, they have transfers to other savings accounts and so forth. So you could create another account, call it 3-2 savings account. So you could have like a 3-1 general transaction, 3-2 savings account. And when you had a transfer, so if you transfer money from one account to another, when you have an outgoing, which is a transfer, you could classify that straight to your asset account, 3-2 savings account. Okay, so that's just an example if you were creating your own. So again, I haven't classified any liabilities here, but if I was to, I'm telling my marker that they would start with 4- something. And again, I'm telling my marker that if I had any equity items, they would start with 5- something. So make sure that you are showing your chart of accounts to your marker. All right, we want you to do this. You need to make sure that you are explaining your chart of accounts. Okay. When you have classified your transactions and created your chart of accounts, so that's what we just did, we created it, please then prepare a simple income statement for yourself as follows. So your name, income statement for whatever period, in this case we used a month, but you can change that, okay, ending, and again, whatever period you've ended. So if you've used a week, it would be for the week ended, and then for the week ending, and whatever date your transactions end. Now, you will see everywhere I've got, so the reason we've done a chart of accounts is because look how nice and neat that is. That's literally our chart of accounts without the numbers. So I had 2 income accounts and I had 6 expense accounts. Remember, straight from here, 2 income accounts and 6 expense accounts. That's my income statement. All of those accounts are going to appear on my income statement. That's literally them minus the numeric numbers on them. So everywhere I've got interest income, I'm going to link in my Excel sheet back. So everywhere I see interest income, so go down. So there's only one place that I have interest income. I'm going to link back to that cell from my income statement. Same with income, salaries and wages. Everywhere I see that chart of account, I'm going to link it and add it in and group it in so that I get a sum for all of the income, salary and wages. So everywhere I see income, salary and wages, income, salary and wages, income, salary and wages, I'm going to be clicking in all of these numbers and adding them together to get a total. And then again, sum in Excel to get this total. So equals the 197 plus the 4618. I'm going to do the same thing for my expenses. Everywhere I see private health insurance and expense, which there was only one, I'm going to link into that cell. So go through, here it is. So link it, here it is, sorry. Link into that cell and hit enter. Same with income protection, same with mobile vehicle expenses and general living expenses. Then add up all of these, okay, and sum them. And then make sure that you are taking your income minus your expenses and you have a profit or loss for the period. Okay, oh, this should be, let's fix that up. Oops, when you link it, you won't have these problems. Okay, so all of your expenses, and make sure that you're taking your income minus your expenses, or in Excel, because this is already a negative, you'll have to plus it. So make sure you got your mathematical symbols right to achieve the correct formula. So because we've already entered them, well, because your bank has exported them as negatives, it's telling it it's an expense anyway. So if you want to have income minus expenses, the formula would have to be mathematically in Excel, income plus, so this cell plus this cell, which will take it away. Okay, to give you the profit or loss for the period. Okay, so note that the items listed as income and expenses are directly from your chart of accounts. You're simply grouping each transaction by that classification. That's the whole purpose of your chart of accounts. So to use Excel linking features, simply type equals to start a formula in the cell that you wish to link. Okay, so for example, you can link the interest figure in your income statement directly to the bank statement figure for this interest. So, for example, let's go to profit and loss. So for the month ended 31 January, excuse me, let's go income. You can call that revenue if you like. Okay, so I'm literally going to link, okay, this cell into the name So equals, click into my transactions tab and click into this. Oops. Okay, so again, so I've linked that. Now I'm going to click in this cell and I'm going to link it into the number for interest and hit enter. Okay, so I'm literally linking it. So I press equals, then I click into the cell I want, like that, and then I hit enter and it takes me back and it will complete that linking for me. It's really important that you do link, okay? This is particularly important when grouping more than one figure. For example, grouping the figures for income, salaries to wages. You would begin with the equals and then you would click on each bank statement figure for the pays that you received, pressing a plus in between each and then hitting enter to complete the linking, okay? And then Excel automatically will sum them for you. You can also enter formulas for the profit and loss for the period by typing equals and then clicking on the total income figure and plus the total expenses figure. And the reason you're plussing it is because it's already entered as a minus, all right? So we go down, link these. So again, to link these, you put equals. You go back and click into your chart of accounts figure. Then everywhere you see this now, you're going to link. So you're going to click here and then you're going to start. You're going to link there, plus that, plus that, plus that. That's it. Oh no, hang on, there's one more. I missed. Plus here, this one. Actually, don't miss one like I just did. And then for this one, you could just simply put equals. Hang on. Equals the sum of these two numbers. Okay, and that will give you a total income. All right, so then you could do that same thing for the expenses. So link all of your expenses and fill them in. So everywhere you see private health insurance expense, link it. There's only one of those. There was only one of those. There were two of mobile expenses, so add them together. It was 32 and 35, I think. There was only one of those. There were two expense donations and gifts, two lots of $100, and there were three general living expenses. So again, put a sum formula in there. So equals sum and click into these cells, hit enter. Now, your profit for the period equals this plus this. Okay. Now, that's how hard your income statement is. That's literally how you can link it, just like that. Okay. So again, you can put the period there if you like to, or you can just leave it blank. It's up to you. All right. Now, you can access the actual Excel file used in this exercise on Moodle, okay? So you can actually see how I've linked that, although I've just showed you how to do it, but you can access this file itself. This will be placed on Moodle under the weekly resources, so make sure that you can, that if you'd like to, you can access it. But we want to see your Excel spreadsheet in this step for your submission, okay? Now, it's not just that, you're not just finished at that point, all right? Now, we want you to do a written component as part of your Word document submission. So we want to know your thoughts and key concepts and questions that occur to you as you complete this recording process. What insights have you gained from completing the recording process of your own personal transactions? And I love reading these. Most students are astounded by the amounts and the types of things that they spend on. For some others, especially parents, it's no real big surprise. They spend a lot on their children, but for others it can be quite insightful. So we want to know your insights. What have you gained from doing this recording process? How does that link back to the key concepts that we're presenting to you over the 3 weeks where we cover the bookkeeping process in our unit? Will this be something that you continue and expand upon in future? For example, create your own balance sheet. I've had a couple students who attempted to create their own balance sheet just to see their net worth. They wanted to see all the assets. They thought of every asset that they had, listed it out. They thought of every liability that they had, So common ones that for the students who've done it, usually they have a house, sometimes a rental, but they also have a mortgage attached to that. So they have the house value. Some use the cost, not market value, and that's again a good key concept to discuss in the questions to follow. Then they'll put liabilities down and they'll take one away from the other, and they'll see what their net worth is. What's my net worth? What am I actually worth? How much money have I accumulated in this life so far? So that's been quite insightful for some students. And so they take the time to do their own balance sheet. You don't have to as part of the assignment, but just for your own personal knowledge. And we also want you to answer these specific questions, all right? So please describe your responses to the following questions. First one, what is the chart of accounts so far as illustrated in this example? Well, I've kind of shown you that already. I created it in the Excel file. What is your own chart of accounts? And you should have done that as well. You should have already shown us. Is it like the one that I've just shown you? Why? Why not? Remember, you can add to your chart of accounts as you classify more of your own transactions. B, what level of detail could you change in the chart of accounts shown in this activity? And I've already given you some good hints and tips when I was going through the exercise. Why might you want to do this? C, how might you analyse your income statement? Has this exercise of recording your transactions through the financial statements been useful for you? If so, why? Or if not, why not? And D, here's where we get into the accrual key concepts. Did you identify any transactions that you could apply the accrual basis of accounting to? Describe how treating a transaction under the accrual basis of accounting might differ from the cash basis of accounting. And I put a little hint in here. These sorts of transactions commonly appear in personal accounts as lump sum payments in advance for a year's worth of expense. So for example, paying your house insurance or your car registration. And remember, we had one of those examples up here. They had the rego for the hubby's vehicle. So if I was to classify that as under the accrual basis of accounting, this wouldn't go as an expense on my profit and loss. You would not see it here, right here. I would delete that and it would make a difference to my profit. Instead, the registration would go as a prepaid asset on my balance sheet, and I would divide it by 12, and every month, because I'm doing it on my financial statements are reporting monthly, so if you're doing it weekly, you would have to divide it by 52. I'm putting that portion in to my financial statements. So really, what should be in here should not be the whole amount, should only be 1/12 of it. That's what my financial statement should look like if it was prepared on an accrual basis. Same with private health insurance. That should be 1/12. Same with my, oh no, that is a monthly expense, this one. Oh no, I think this one is also a monthly expense, so scrap that one. That's already a monthly expense. That's already a monthly expense. If they paid their private health on a lump sum basis for a full year, then you would divide it by 12. But I'm pretty sure they said that was there. It would make sense to be a monthly. This was also a monthly. So these were monthly. The registration wasn't. The rego was for the full year. So I had to divide it by 12 to just get 1 month's worth because that's my period of reporting. So that would be an example of an accrual basis transaction, and these were all monthly. So this was actually my profit under an accrual basis of reporting, okay, instead of under a cash basis like previously shown. So I would start explaining those things as my answer to this question in D. Did you identify any transactions you could apply? Yes, I did. Mine was car registration. Okay. If you didn't, you might still like to discuss it and describe how treating a transaction, you still have to do this, whether or not you identify transactions in your transactions or not. You describe how treating a transaction under the accrual basis might differ from the cash basis. And remember, it's just in timing. It's when you recognise that. You were still recognising it as an expense, but instead of on a cash basis in one period as a lump sum, in the accrual basis, you're recognising it over 12 months. So 1/12 every month. Okay, now also under this, under here as well, a lot of students like to do some further analysis as part of their insights gained from completing this recording. So I just showed, for example, this particular client of mine, they like to analyse things as a percentage of their income. So I would put equals every individual expense divided by the total of their income. And I want that as an absolute reference. So I press the F4 button and little dollar signs come up in front of it, which means that that reference doesn't change, which means that I can just drag this down. Okay. And it will make it, it will copy that formula down, so it will not change this cell. An absolute reference means the ones with the dollar signs will not change, whereas the others will change. So if I copy this one down to this blue highlight here will copy down to this one, and so forth, because it's not absolute, whereas the cell B8 was. So that basically means that interest represents 4% of my total income for the month. Salary and wages represents 96%. So again, for this family, this is not where they want to be. They eventually want to have passive income. So this is active income. They actually have to work actively for this income every month. They want to increase this passive income. They don't have to work for this. This is their money working for them. And eventually they would like to get into real estate and have some more passive income where the real estate generating the income for them instead of them having to actively work. So at the moment they're not too satisfied with this, but they can't do anything. They're still building their assets at this point in time. They also have a family to look after. So, but anyway, that gives them, all we're doing is providing information for use in their decision making. Remember, that's the purpose of financial statements. So again, now some students like to take percentages, so divide it by their total expenses, so they get what percentage, let's make that absolute as well. So they get a total percentage of how much their expenses are out of their total expenses. So private health insurance represents, almost 8% of total expenses and so forth. But this particular client doesn't like to know, they don't care what's the proportion of their total expenses. They want to know what proportion of each expense is part of their income, because they want to know how much they're spending of their income on expenses. So I actually had to put that formula divided by the income and make that absolute and get rid of, it doesn't really matter. Well, let's get rid of the minus by putting a little minus in front, just so it's nice figures. Okay, so this then represents for my clients that 2.5% of their income was spent on private health insurance. 0.4% of their income was spent on income protection. 22% was spent on general living expenses. Now this isn't good for them. They generally target a 10% general living expenses. So they blew the budget here. So I don't know what happened in that month. Again, with their donations and gifts, they aim for 10%. So they know they've got a bit of leeway to give to charity, to ask, all the door knockers and so forth. And the rest is just sort of arbitrary. The main thing they look at is their general living expenses. They try and keep that and curb it up in, well, definitely around 10%. So all up their expenses were 31.6%. Now remember, they like the cash basis. So let's get rid of that. Bring it back to a cash basis. So all up their cash, on a cash basis of accounting, their expenses represented almost 45% of their income for that month, which for them, they consider that to be really high. Okay, so again, let's see how much profit is out of their income. How much were they actually able to save? So they were able to save 55.1%. So again, that's not good for them. They like to aim for 60%. That's because I gave them that target. So I mean, they're fairly close with it, but they like to see that a little bit higher, and that's the portion that they are putting aside to try and invest into something else that will provide them with passive income in the future, so they don't always have to do this. And that's their strategy. So, that's one way of analysing how they analyse it to make meaning for them. That's one kind of user using their financial statements and analysing it in their financial statements. Okay, so that's the example file that will be in Moodle for you. Now, we've said please allow up to about 5 hours to complete this step. So you can see I've been able to explain this to you in just under an hour. You'll need a little bit more time. but I shouldn't imagine it would take you 5 hours. What will take you a long time will actually be to include a written component, all right? So hopefully that's explained step 4, and hopefully you find some good insights out of it, and I will see you in the next video for going through step 5. So happy recording.